All right, well, welcome everybody, and thanks for joining us for the 7 Secrets of Trading. My name is Mark Silberman, one of the founders of NetPicks. NetPicks was founded back in 1996, so we're now entering our 16th year of working with active traders just like yourselves. We're going to have a really great presentation for you over the next, let's call about 30 minutes or so. We're going to detail to you what we've learned over 16 years of trading, really what we've kind of considered one of the biggest trading breakthroughs for us, which is identifying the 7 secrets to trading success. So I want to introduce to you 2 of the people who will be joining me. The first is Brian Short.
Thanks, Mark. Again, this is Brian Short. Been with NetPicks now going on 8 years. Hard to believe it's that time has gone that fast. I've been a trader for over 25 years, and the last 8 years I've been focusing on intraday trading, more active trading. And so with that, I'm going to turn it over to Troy. Go ahead, Troy.
Thanks, Brian and Mark, and thanks for inviting me to speak today. I'm really happy to be here. This is one of my favorite topics. Like Brian and Mark, I've been trading a long time too. I started trading back in the early 90s when I had to wait for my paper charts to actually arrive in the mail each week, and then I would fill those charts in by hand with the end-of-day data from the newspaper. And I made my first trade back in the early 90s. In those days, the British pound dropped significantly against the dollar, and I caught some of that trade and actually took my winnings and went on a several-month trip, various countries, Europe, South America, where I met my wife, and we're approaching our 16-year anniversary now. Probably the best trade I had ever made, and I've been hooked ever since. I encountered NetPicks some time ago and joined their team about 3 years ago, and now I host a live trade room where I call live trades every day for our membership. And it's been an amazing experience. So that's a little bit about me. Mark, you want to take us into the presentation?
Sure. So a couple quick things. I know some of you are listening to this on the MP3. Some of you are reading this in the PDF, and that's perfectly great. For those of you watching the video, we'll also a few moments here and there, like you can see on your screen right now if you're watching the video. We'll show some charts, but it won't matter whether you're reading, listening, or watching. This is definitely something that you guys really can learn a lot from this. And one thing I would like to ask all of you to do as we go through each of the 7 secrets, I really think you would kind of serve yourself well if you'd write each one down if you're able to, and go back and try to reflect on each one of these and make sure that this is something that you can check off in your checklist of trading, because if you can't, unfortunately, you're going to be probably in the majority of people who do not succeed with their trading, and that number is probably 93 to 94%. So this is all about being that 6 or 7% and being on the positive side of the ledger. So with that said, let's start with what we consider the first secret of trading, and that is mastering a method that can be used in multiple markets and multiple time frames. And NetPicks has several different trading strategies. Currently, when we're talking about this, we have the 7 Summits Trader, we have the Ultimate Swing Trader, and all of those are designed to trade multiple markets and time frames. And there's a reason for that, and the main reason is you have to have the ability to be able to switch markets and time frames, because what's hot today, when we're talking about this right now, we're in 2011, it was different in 2010 and 2009 and 2008. And if you're trading a strategy or a methodology that's kind of boxed in on one market, maybe it trades Euro US dollar on a 5-minute chart, you're not going to make it over the long term with trading. So Troy, I thought maybe a good idea would be to sort of show them really quickly, maybe even with the 7 Summits Trader, a variety of different markets and even platforms. You've got MetaTrader up right now, but show them on MetaTrader, then switch over to futures, maybe on TradeStation.
Oh yeah, sure, Mark. One of the things about the 7 Summits Trader, of course, is it does accomplish that for us. It's dynamic, and so it's going to adjust itself to the particular market that we want to look at or plot on a chart. This is an excellent swing trade. It's the pound dollar. I wanted to show this because it really illustrates what we're talking about here. You can see that the trade sizes are actually different depending on the particular setup. Like, look at this long trade, for example. You have this little entry and the target's way up here, but when you look over to another part of the chart, you can see that the trade is adjusted. It's a bit smaller, and that's due to the ability of adjusting to the market condition. And so because it can do that on this particular market, it could also do that when we put it on a different market. Let me switch over and show you exactly what I mean here. Okay, so hopefully you can see that. I've put up a chart of crude oil futures, a completely different market. In fact, this is a day trade chart. It's a 377 tick chart. So before we were looking at a pound US dollar swing trade on a daily chart, an end of day chart, but here's a day chart that it actually trades really quickly. And again, you could see how the system has adjusted itself. Each one of these little series of dots here represents a trade setup, and you could see some of them are small, some of them are large, and the system has completely tuned itself to this particular market.
So we call that basically, it's dynamic trading, dynamic targets, dynamic stops. It enables Troy to be able to trade the same exact methodology on a daily chart and move it over to an intraday tick chart, move it over to a 5-minute chart, jump into Russell E-mini or S&P E-mini, and even move over into stocks if he wanted to. I mean, you can see in that little pull down, and I know those of you listening don't see that, but he basically has futures markets, forex markets, time intervals, all using the exact same strategy. Now, we're showing you our strategy, but I don't care what you're trading. You have to have this ability to be able to trade multiple different markets and time frames. Brian, I know you've kind of, adjusted over, over the years that we've been working together with various markets that you've traded. I mean, this has always been very important to you, I imagine.
It is, and one of the keys to multiple time frames and intraday trading and swing trading is the diversification that you get out of that. For instance, in my own trading, I'm trading intraday. I'm trading silver right now. I can tell you a year ago I wasn't trading silver. And I'm trading silver intraday, and I'm also trading it on a swing trade basis with options. And I'm using the exact same method for both of those. And it's very powerful to be able to have that tool, so to speak, in your toolbox where you can move to the markets that are going to get active. And so, again, I think that's key to any trading system, to have that ability to be able to move very quickly between markets.
Mark, if I could just interject here, Brian was talking about trading silver, and I think he's referring to silver futures. And right when he said that, we must have been on the same wavelength, because I just pulled up the silver I just pulled up the silver iShares ETF. And so for those that can't really participate in a market like silver futures, there's an option to trade iShares. But again, it's the same method, same strategy, and it works on this ETF as well.
Yeah, and I think we've dealt with thousands of traders over the years. People get so paralyzed because they have 15 different systems that they've bought, over the last 12 months, and they don't know where to start. They're getting, cross currents of signals, one saying buy, one saying sell, one saying do this, do that. You have to standardize. Whatever you do, you have to be focusing on one methodology, and let that methodology have the flexibility to move between markets and time frames. Otherwise, I guarantee everything's going to be overcomplicated, and you're going to be paralyzed by it. And the reverse is true. If you're trading a methodology or approach which is one market, one time frame, 6 months from now we could be having the same conversation, and you probably would have quit trading or obviously been way in the hole and probably moving on to the 10th new system over the 6 months. So it's very, very key, which kind of like reminds me and brings me to really what is the second secret of the 7 secrets. Very, very critical, and we call it the power of quitting. And quitting is always a word that is considered fairly negative, right? I mean, you don't want to quit anything. But one of the greatest things you can do as a trader is quit on the day, the trade plan, whatever the case may be, as quickly as possible. And what I mean by that is when I enter my days, I actually want to be in and out as fast as possible. I want to go ahead and hit my targets and my stops and be finished. Because what happens, without a doubt, as a day trader, there's going to be pockets of time in the day that are effective, and the rest of the day and the night are usually just not worth trading at all. And too many people try to make it a full-time 5, 8, 10-hour a day, especially forex traders, and you end up once again, obviously in the 94, 95% of the people who are not successful. So I come into every session saying I want 2 wins, positive, and done. That's my power of quitting when it comes to day trading. I have a little different approach on swing trading, because swing trading is obviously different, but really, really valuable. So many people overtrade. They think that the more they trade, the more money they're going to make, and the reality is it's the exact opposite.
Mark, this rule really has been instrumental in my trading, and getting me to the positive side. Um, like you just said, the thought out there is, well, if I have a system that has a winning edge of, say, 65% or 75%, why don't I just trade it the whole 24-hour period? But the bottom line is, you're going to run into times where the market's going to get choppy, and you're going to get chopped around, and you're going to have that series of losing trades, and you will end up giving back what you won earlier in the session. So the bottom line here is, if you get those couple winners right out of the gate, step aside and be done on the day. And it also eliminates the additional commission that you have, whatever that is, whether it's the spread and the pips or commission on a futures contract. And then it also reduces the exposure to making mistakes. Let's face it, we're all human. I don't care how good you are. There's going to be times when you'll make mistakes trading your method, and you reduce the amount of screen time you have and that potential.
I pulled up this Russell E-mini chart because I wanted to give you an example of something that actually happened yesterday, calling live trades with the members in the room and everyone's money on the line, and we actually did hit our power of quitting goals on most of our markets. And I just wanted to show you on this Russell chart here, we started on this particular trade, and it didn't quite get all the way to our goal, and it stopped out pretty much at break even. And then we had this long trade that came down and actually took a loss. And some traders, they lost some confidence and were afraid to take the next trade. And the ones that stuck with our power of quitting knew they still have to get their 2 wins, and so they have to keep trading. And so then this short came along, and that one also stopped out very quickly for break even. So we're only a little bit behind, but trying to get positive. We were able to get back in on this little red bar here, and we took this trade all the way down, and that one actually put us positive for the session. And so we ended positive for the week and for the session just because we stayed with that disciplined approach, the power of quitting. And then those that didn't get positive, they would have taken this next trade here, and it would have been another loss. So it would have forced them to keep trading. And sometimes that could really get you into trouble. We got lucky. We had a nice winner then on the next trade, and they were able to quit positive too, but they kind of stepped away from the power of quitting spirit and the trade plan itself, and they really took some additional risk. And it could have went the other way. They could have ended up digging themselves a bigger hole. So that's the thing to be aware of, is that the power of quitting is a self-tuning, self-adjusting, goal-setting strategy. We talk about a trade system that adjusts itself to various markets, but knowing when to stop is probably the hardest thing about trading. It's where the art of trading really comes in, and we believe in reducing that to a mechanical rule, and the power of quitting does that. So it takes the guesswork out, it takes the discretion out, and it's going to adjust to market conditions, because what it ultimately does is it allows you to quit positive on most sessions while taking what the market wants to give you, and that's the key.
Right. I mean, everybody's looking for the magic formula when it comes to trading. Well, the magic formula is this: if you walk away with anything, walk away with this. Go for 2 wins, end positive, and done. If you have 2 wins, you're still negative, keep going. Trade until you're positive, but have a time limit on the session. Okay, every market has usually 2 to 3 hour windows where they can be profitable. Outside of that, they're not. So you basically have 2 circuit breakers. You have time, and you've got the power of quitting rules. If you walk away with anything as a day trader, you'll be so much better off with just following those rules, which kind of reminds me and brings me to really the third secret, which is a bit of what we started to allude to a little bit. And the third secret is trading plans always rule. And what we mean by that is too many people, and we've encountered thousands of people throughout the years, who we ask them, well, what markets do you trade? And they start rattling off a bunch of markets, but they're like, I don't know. I mean, I trade this market one day, this market the next. If it loses on Wednesday, I switch into the U.S. franc the next day. If that loses, I jump into the pound U.S. the next day. Then I become a swing trader. They don't have a real plan when it comes to their trading. If you want to be successful, you need to know the exact market or markets you're trading tomorrow, the exact times of day you're trading, the exact time frames, whether it's a time interval, a tick interval, a daily chart, whatever the case may be, the exact method, your power of quitting rules, all of this has to be defined. And if you enter your trading days without all that, and that sounds like a lot of work, well, I guarantee you, you're losing money right now. Brian, I know for you, right, trading plan is just so critical.
It is critical. And as I talk to a lot of the traders that are members with our products, the first question I ask them is, what's your trade plan? Because I want to understand what they're trading and the time frames they're trading, that kind of a thing. And sometimes I'll get the response back that, well, I don't really have a trade plan. And like you said, Mark, they're trading this market and that market and jumping all over the place. So there's the first mistake. Second mistake is the second question I ask them, are they sticking to their trade plan? And a lot of times I'll get, well, not really, because of this and that reason. And so for me, this is probably, I don't want to say it's the number one, but it's a key critical area. You have to develop your plan. You've got to do your back testing, okay, to develop that plan. And then once you've gone through all that work, you need to stick to your plan. I'm a diver, and one of the things we learn early on in diving is you plan your dive, and then you dive your plan. Well, the same is true in trading. Once you've put that trade plan together, you've planned your trading, then you've got to trade your plan. So just if there's anything I can reinforce here and try to drive home, stick to your trade plan. Once you've developed that, stick to the rules.
It's so true. I mean, without a trade plan, it's like, it's like piloting an airplane without knowing how to read your instruments or having a flight plan. I like to use that similar metaphor, Brian. A trade plan is what has been determined from a lot of hard work. You do some due diligence. I call it the ditch digging of trading, where you actually create a foundation for yourself. And so a trade plan evolves. It evolves from what you learn by studying the history of the market and time frame that you want to trade. You could look at the wins and losses and the relationship they have with one another, and you're going to learn. You're going to learn the best times to trade. You're going to learn whether or not your trade plan, or what you're trying to develop as a trade plan, actually gives you an edge in the market, because where we really make our money is a lot of trades and the statistical edge that we get over time. It's not this trade or that trade, it's how all the trades work together. And so when we have a trade plan, it's going to give us hard rules that we could follow and have confidence in, so that we could actually take the next trade, especially when you're trading through some tough sessions and you're taking some losses. If you don't have a trade plan, most people, they just run for cover. They're going to quit, and they might be quitting on a very profitable market and time frame. And if they would just stick with the trade plan, they're just going through the normal ebbs and flows of price action. And usually people end up quitting right when the best trades are about to come. And so they quit with their losses instead of hanging in there to catch the winners and make new equity highs and grow their account. And the trade plan is going to keep you steadfast and on the right track.
All right, so that kind of reminds me, as we're talking specifically about trading plans, the fourth secret to trade success is what we call the art of trading. And this one's always a little controversial, because people want to feel that they can trade 100% mechanically, because there's probably nothing more reassuring than not having to think when it comes to trading, right? And have the computer do all of the thinking and basically make all the decisions. It's why so many people have, purchased robots and automatic trading tools, and I can pretty much guarantee you, all those people, probably a lot of you listening, you've lost money with them. The reason is you missed out on something that we call the art of trading. We kind of have a philosophy here at NetPicks that 90% of trading can be very objective and very mechanical, but the other 10% is what we consider the art. And some of you may think, okay, well, that's subjectivity. I don't want subjectivity in my trading. But it's interesting, because most of the subjectivity that we do can actually be very rules-based. And one of the, I want to give some examples of what's the art of trading. Well, a little bit we've talked about how we create these trading plans and these trading rules, but one thing that we do when we get a mechanical setup, like right now you're looking at a Euro-US dollar chart, and Troy, maybe if you can possibly even just point out one of the trades here with maybe one of the entry prices. It would be kind of interesting to talk about that really quickly and to see if it would fall under, one of our, art of trading rules. So I don't know
Yeah,
if you can, kind of do that.
yeah, I sure can. There's a nice short right here, and the little plus sign shows you the entry.
Right. So do we know about where that entry price would be officially?
We do.
Okay, so it's at 1.3675, and I'm going to ignore the fifth digit out on this. And those of you I know not watching the chart, you kind of hear the price. And what we've learned on Forex is that the 10 pip level, 10, 20, 30, 40, the 50 is even bigger, 60, 70, 80, 90, and then the 00 is the biggest. And so what that means is if I get an entry to go long, like right on a 10 level, let's say like a 1.3680, or let's say like on this short, if this happened to be a short of 1.3670, I would always adjust my entry down below on a short, what we call that key level. That's the art of trading, because a mechanical system can't think that way. Okay, and it gets people in trouble, but humans who trade these markets are definitely psychologically influenced by these key levels. And as much as people want to feel, oh no, it doesn't matter at the 00 level or the 50 level, it does. I can't tell you how many thousands of trades I've taken and observed where human nature and all the collective psychology of everybody trading these markets get influenced by those numbers. Even the 5 level has some influence. So the 3, 6, 7, 5, I would personally adjust my entry on this mechanical setup to 1.3674. And I would say probably 90% of the time it won't make a difference, but there's going to be that 1 out of 10 times that it's going to save me a full stop out. And that little adjustment we call our insurance policy is worth every few pips that I may pay on the other trades. So, Troy, what are some things for you, I guess, on the art of trading?
Well, for sure, the key level adjustments, like you said. I mean, I've reduced those points you just made into hard rules. And when I'm calling live trades every day, looking at various markets and time frames, I don't have time to think about it. So when I see a short, like in this case on the 7.5, I'm calling that trade at 7.4. So I'm making that adjustment. It's not even something I think about anymore, and it really makes a big difference because, like you said, that 1 pip, you could still have a successful trade if you give up 1 or 2 pips for a minor adjustment. But when you save a few losses in a row, because sometimes losses cluster up, then you really see how that works. So the trick here is to keep that art of trading to 10%, not 20%. Don't try to be too much of an artist. And I hope everyone knows what I mean, because what ends up happening is you start interjecting too much subjectivity, you change your trade plan, you change the system. Now you have no way to base any sort of, you don't have an edge anymore. You've given away your edge because what you've determined to be a good trade plan, you've now changed with too much art interjection. That makes sense.
Yeah, it does. I mean, the idea is 90% of this should be mechanical. I think you make a great point. The other 10%, people shouldn't get hung up on the fact that we're saying there's some subjectivity. It can be all reflex. I know for you it is. I know for me it is too. When I'm using my art of trading, I don't even think about it anymore. I know exactly in every situation where I'm going to make that adjustment. I mean, for you, Brian, I guess, what stands out the most on this?
It's making these adjustments, and I have a great example. I had a conversation with one of our members the other day. We had a trading session where the market had kind of gapped down overnight, and I was in a long trade. That long trade was taking a lot of stress, and there were some obvious low swing points on the chart whereby I was not going to reverse out of that long position and go short, but the system generated a number of shorts for me. Okay, without that adjustment, I would have had 4 losing trades on the session. Okay, with that little bit of discretion, I was able to save those losing trades and end up on the session with 1 winner. That's a huge, difference in the result. And so, I guess the point I want to drive home here is, with a little bit of discretion, and I want to emphasize little. You don't want to get crazy with this. You can add, an additional 5 to 10% to your winning edge. And the other thing I think people like to, you look at, Mark, you touched on this a little bit, is automation and robots. They simply cannot have that the brain is a very powerful thing, and there's no way to program into automation or robots this concept that we're talking about. It's the human in front of the chart that can take this action, that can read the chart and see what's going on. And I think that's where a lot of traders kind of fall by the wayside when they're looking for that magic money machine, because they don't want to do it themselves.
It sounds amazing, the robot, the turn your computer into a cash machine. I love it too. I mean, in theory, it's great. But remember, we've been doing this since 1996. I'm still waiting for that trade system to come through the door, or that person with that system to come through the door and say, here it is. And I've tried dozens, probably hundreds of these, and I've still to this day always go back to the trading styles that we've talked about. And we have the opportunity to trade whatever's out there if it worked. But there's a reason it sounds great in marketing. Unfortunately, it doesn't ever convert to a successful plan over time. And speaking of successful trading plans, one of the real essential things in trading, right, is managing your risk. This is the 5th secret to success of our 7. Risk management is ultra critical. Okay, it is one of the things that gets so many potentially successful traders kind of ruined before they hardly even get going than maybe anything else. I mean, because there's actually a lot of people who actually fail in trading who could have been successful because they're actually really good at following the trade plans, following the rules. When we get to trade psychology in a little bit, they actually kind of can handle some of that. But where they get into trouble is they way over leverage, or they don't understand the leverage that the brokers give them, and they abuse it, and then they kind of can't understand how they can have 2 or 3 losers in a row, which is going to happen to all of you on a regular basis, and they're down 50% in their account. Forex trading in particular, even though the brokers have scaled back the leverage quite a bit over the last few years, it's still way excessive on what you actually need to trade and trade successfully. So I'm showing you up on the chart here one of the strategies that we have, part of our Ultimate Swing Trader, and these are called our one-day swing trades. The reason I'm showing you this is I want to show you that every single time before I get in a trade, and the little plus mark there is my entry, I have this little dot down below. I know that's my exact stop. So in this case, maybe I'm looking to get long at 3371, and my stop is down at like 3320, which hopefully you guys are saying no, key level. Make that 19. But I know right away I've got a 50 pip potential risk here. Well, I have to go ahead and buy this euro US dollar, which ends up hitting my target a few hours later, fully mechanical. Okay, but I had one little art of trading adjustment, and I knew my exact risk. So I'm not going to go ahead and put on a position that's too large. Like my broker, I could put $1,000 into this account. They would let me trade literally probably 5 minis, in some brokers even 1 full size. But that would be crazy, because if this trade lost 50 pips, I'd be down 25 to 50%. The same goes on my short. I always have the exact entry, the exact stop, the exact target. Hey, that's great. But I have to kind of go into this, entry back to stop, and know what my risk is in order to be able to handle the fact that maybe my account's $1,000, somebody else's might be $10,000, somebody else's might be $25,000. You have to trade many times different markets, different time frames. For some of you, you maybe have to trade micro minis on Forex. Other people can trade several minis. It's all going to be different. Brian mentioned, and Troy did silver. Well, silver futures is not going to be for most people until you have a certain account size and understand your risk. Troy, kind of for you on managing your risk, what stands out the most?
When I think about risk, I think of 3 key things. The first one, Mark, you just mentioned very eloquently, of course, and that's putting on a small risk on every trade. It's really critical because wins and losses will always come at a random distribution. You never know if any trade will win or lose. Typically, losses come in clusters. You might get several losses in a row, and if you're over leveraged, you can wipe yourself out and not be there to take the next trade, which is going to start the 12 trade winning streak. Okay, so you have to really put on small risk. It's okay to stub your toe as long as you don't lose your legs. That's the thing that I keep telling myself every day, because it's tempting to want to hit that home run and make a lot of money on one trade. But just remember, you could lose it all just as quickly, and that's usually what ends up happening. So that's one main thing. The second thing is, when we're talking about risk management, we're also talking about managing the trade itself. Mark, if I could just show an example really quick. Okay, so I'm also looking at a 1-hour chart here. This is a euro yen, and the system I like to use will cut risk. Let's look at this long trade here. Gets in at this little plus sign. We're going for this target. The stop begins way down here, but it starts to actually reduce risk. The price moves up and hits our first target level, and the stop is instantly pushed up to put us in a break-even position. And then we're able to continue pushing that stop up and actually make more with a trailing position. So risk management, you've got the grand theme of not putting too much risk on every trade, but then what do you do when you're in a trade? You also have to manage your risk. You don't want to have too much risk on that trade, and as the trade develops, you want to be able to get rid of the risk if you can and turn that into a profitable trade.
And Brian, I know like when you're trading the markets, I know one of the things you talk to me about a lot is you get in and you're kind of quick on the trigger sometimes, I think, to if the trade starts to turn against you, to get out and to lock in that profit, or to start reducing that risk, especially some of the markets you trade that are very volatile. They take off quickly. Kind of what's your approach been?
Yeah, that's correct, Mark. And for me, it's a matter of statistics, and I want to share a losing streak statistic from Van Tharp, and we use this in our mentor program. And think about this for a second. A system that wins 80% of the time has a 100% chance of losing 2 trades in a row. Okay, the average number of losses in a row that you can expect is 3. All right, and it has a maximum, the worst case scenario, of 7 losing trades in a row. Okay, now again, I want to stress this is on a system that wins 80% of the time. The key here is if you're risking 5%, 10% on each trade, is that the right thing to do? Absolutely not. Yeah, on the winners, you're going to reap the reward, but what happens if you hit that series of losing trades? What happens if you hit the maximum 7 losing trades in a row and you're risking 10%? That's a 70% drawdown. Let me talk a little bit about the drawdown to recovery. If we have a 5% loss, what does it take to get back what you've lost? It takes 5.3% gain. Likewise, as that escalates, as it, the 15% range takes a 17.6 gain. Not bad. That's, fully manageable to come back. But when you get into those higher risk areas and you're looking at a 30% drawdown or 40% drawdown or worst case 50% drawdown, it takes a 100% gain to get back and a lot of stress. So the point I want to make here is if you're a new trader, you need to really go into the market. First of all, we recommend you make 25 trades on a test demo account before you even trade real money. Secondly, when you get ready to take that step in and trade real money, you need to do so with a very small amount of risk, 0.5% maybe. Prove to yourself that you can trade profitably and correctly at that level before you graduate to the higher risk levels. And I'll say one last thing here. What we find typically are the traders that are more advanced and have more money to risk actually on a per trade basis risk less than those traders who are, say, underfunded. The trader that has a $500 account is going to risk that obnoxious risk. So learn from that, I guess, and keep those risk per trade at a very manageable level.
Yeah, I think the best point you made there when you said, okay, 80% winning success. I mean, that's a ridiculously incredible system if you could ever achieve that.
Right.
But you laid out to us that system is still going to, at some time in its history or in its future, it's going to lose 7 times in a row. I guarantee you, at 3 losers in a row, that about 65% of the people will have already quit on that system. At about 5 losers in a row, about 80%. At 6 or 7 losers in a row, I bet you 98% of the people have quit on that system that can effectively win over any length of time, 80% of the time. So that's why it's so critical to buy yourself, right, that staying power with using small risk. So you're not going to be one of those people at 3 losses in a row, you're panicking and quitting and looking for the next holy grail of trading. And maybe, more than likely, walking away from a system that really could work for you over the long term. And, and speaking of like systems and what's important, the sixth secret, and it's actually shouldn't be a secret, but it's having the best trading tools possible. And I actually think this is one we could probably talk very briefly about, because there's a right way and a wrong way. And the right way is to have the best data feed, the best charting platform, right? Excellent internet access. Don't look for necessarily the free options. I mean, you're looking at MetaTrader right now. Hey, that's a great free option for Forex traders. But if you're like a futures trader or a stock trader, you're going to probably have to spend a little bit of money on a TradeStation or a Ninja Trader to have a platform that's capable of handling the multiple markets and time frames. And too often over the years, we've seen people willing to put up hundreds, if not thousands of dollars in trades, but then they want to spend nothing on the actual platform and their tools themselves. So for me, it's like owning a business. I'm sure, Troy, you've always got kind of great things to relate things to. Would you ever locate your business in the worst part of town? Would you ever not spend any money on marketing? Would you ever not have all the tools that you need to be successful? Probably not. But for some reason in trading, people think that that's the place to cut corners. I mean, what's kind of your feeling on that, Troy, with who you've worked with?
I totally agree. I mean, I want to have the best professional tools because that's what my competition has. I mean, imagine being in a NASCAR race and you're the only one that shows up with a horse and buggy, and now you're going to compete. Or you want to build a house with a hydraulic nail gun, or do you want to use a stone? I mean, those two analogies kind of tell the story. Hopefully everyone's nodding their head saying, I want to use a hydraulic nail gun. Or I want to be in the fastest car possible if I'm going to compete in NASCAR. Well, trading's the same way. If you don't have professional tools, then it's like being in a one-legged butt-kicking contest, but you're the only one hopping around on one leg. Okay, try to survive in that scenario. Everyone else has found a way to get back on two legs. You're hopping around on one leg. You don't stand a chance. So don't be cheap on your trade tools, because in the end you're just being penny wise but pound foolish.
There you go. I like all those. It's trying to balance on a two-legged stool, right? I mean, we can say that as well. Brian, I know you have a lot of people that you've dealt with over the years. I know sometimes you get very frustrated with it because it seems to be the area that all of a sudden everybody's like, they don't want to spend a little bit of money to make some money.
Yeah, it's like we have to do a sales job on convincing them what the right thing is to do. And both of you have said it. Bottom line is we're in business, okay, to be successful. We're in a professional business. We want to have the best tools available to us so that we can execute and become profitable. And I think too many times people stumble over the fact that they're going to save a few pennies, and it ends up costing them in the long run. On the trading side of it. They don't look at that side of the equation. How much is it costing you? How many missed trades did you have? Or how many losing trades or winners did you miss because you don't have the best tools in place?
You can pay for that platform or that data feed, right, with one effective trade, or like you say, making one less mistake. It's one of the best investments you can make. Let's get to the seventh and final trade secret, and the reason it's number 7 is because a lot of what comes before has to be in place for this one to be mastered, and it's trade psychology. I know a lot of people listening, you guys are probably shaking your head. You know that this is a tough one. When we do surveys, when people come into our webinars and we ask them, what's your biggest roadblock or obstacle, what had it been if you're successful, and we give them a whole bunch of choices, number one, I think for years when I've asked this question, is always trade psychology. Okay, and I think in the 7 secrets, if you can get number 2 down, which is power of quitting, if you can get number 3 down, which is having an effective trading plan, and number 5 down, which is managing your risk, if you've got those nailed down, I actually think you can really get up and over the challenge of number 7, which is mastering trade psychology. Because think about it, if you can get that risk to a level where it's workable, get in, get out, get done, right, based upon the power of quitting, and know exactly what your plan is, because there's nothing drives a trader more crazy than not knowing what the heck they're doing on a given day, and you lose confidence so quickly. And this is a very difficult profession, trading, because you have to go into this knowing you're going to be wrong on a regular basis. You're going to be wrong every single day. Even on your most successful days, somewhere along the way in that day, you were probably down a little bit. And that's hard for a lot of people because it's not just a function of working hard and getting a reward. You can work really hard at trading and definitely have less than when you started on that given session. So, Troy, I guess what are some of the tips that you have in this area?
Well, there's so many things that could be said about trade psychology, but I think you can reduce it down to a very simple process. There actually is a process to solve this, and I believe it's a step-by-step approach. It all begins with knowing why you're trading in the first place. A lot of people are trading and they've never even asked themselves this question, and maybe they're trading for reasons they don't even understand. Some people trade because of the thrill of it. Some people trade because they want to prove that they're smarter than the market. But the only reason why you should really trade is to make money. There's no other reason. So once you can settle on that and actually take ownership of that idea, then you have to ask yourself the next question, well, what do I have to do to actually achieve that objective, to make money trading? And from what I've learned after all these years and all the thousands of live trades that I've called on a day-to-day basis and taken myself, is that the only way you make money trading is by trading the edge that your trade system, trade plan, everything that we've been talking about, it gives you an edge in the market, a statistical edge. It's kind of like being the casino. I mean, the casino doesn't go broke, right? It doesn't care if it wins or loses at any blackjack hand, for example, but it knows that if it does $100 million in blackjack hands, by the end of the year, it'll have, I don't know, $104 million in the bank, for example, because it has that small edge. Well, we have a much larger edge. When we put trade plans together, we're looking at 60%, 70%, somewhere up in that range, even 80% sometimes. We're getting a big winning percentage. That gives us a real edge. Now, on the other side of that equation are some losses. Okay, we accept that. There's no way to divorce the losses, because if you do, if you try to, you're going to end up missing the winners. And remember, the reason why we're trading is to make money. So, you know, you have to have that confidence to take the next trade in your trade system, because the next trade, that's all it is. It's just a trade. No one ever became a successful trader from the next trade that they're in. It's always a series of trades. It's always the edge that the system gives you over time that's going to grow your account. So if you find that you're fretting one trade, you know that should be a caution flag for you, because when that trade's over, now what? Now you have to take another trade, right? And then another. I mean, we're traders. That's what we do. We trade. So you have to elevate yourself to a higher elevation. I like to think of the trees in the forest metaphor. You know, it's okay to sacrifice a third of the trees in your forest if it means you can grow your forest 2/3 larger. That's where we make our money. So don't get lost inside the forest amongst the trees. You need to elevate yourself above it so that you can grow your overall forest and be at peace with the side of the equation that has to accept some losses in order to get to the winners.
Trade psychology for me is the #1 issue why traders fail. And we could talk for hours about this topic, but here are a few of the key points I think you need to think about in your own trading. First of all, the main overall key is to try to trade with neutral emotion. And what we mean by that is don't get excited when you have the series of winning trades. You know, don't get overly excited and do foolish things. Also, on the flip side of it, don't get overly depressed when you have this series of losing trades. Here's a few of the things that I've noticed that traders kind of get into the trap of trade psychology in their trading. And some of these might, you know, you'll be able to identify with. Some you might not have a problem with at all. But here's just a few of the most common ones. First of all, the need to be right and taking profit early. Okay, this is a situation where, let's say you're trading the Russell and you've got a 20-tick target on the Russell, and you see the trade going in your favor, and at 10 ticks, you know, you're $100 positive. You just decide, oh, you know what, I'm going to take the profit. That's the worst thing you can do. You have just overridden your trade plan, and in reality, let's say your risk on that trade was 20 ticks or $200. You've taken a trade and taken a $200 risk on it and only gained 100. And ultimately, that trade may have gone to its full target objective, so you missed out on another $100 worth of profit or another 10 ticks. So try to avoid that. Let your system do what it does. Follow the rules. Secondly, consecutive losses. I'm stepping aside. It's probably the most common trade psychology issue. When you experience that second losing trade, that third losing trade, it gets painful. It's hard to take that fourth trade. But if your trade plan dictates that you do that, then stick to that trade plan. Try not to outguess your trade plan and what the market's doing. Afraid to lose, let's move that stop. Don't do it, is all I can say. If your trade plan dictates your stop should be at a certain level, and the trade just turns on you and it starts approaching that level, don't get excited. Don't move that stop to give the trade more room to breathe, so to speak. If the price action hits your stop on the trade and you're out, then you're out. Look for the next trade setup. Let's modify the system to avoid losing trades. Wouldn't that be nice if we could somehow detect before we get into a trade that the next trade was going to be a loser? We simply can't. Okay, and that's always a kind of a fallacy, or people try to figure out how can I avoid losing trades, and the fact of the matter is, you're not going to. You need to learn to accept that you're going to have losers in your trading. So, again, some of the common things that we see that can affect your trade psychology. I think it's important to inventory trade psychology issues in your own trading. You need to recognize when they're affecting your trading, and then deal with them. I would recommend also that you keep a trade journal. It's easy to see these kind of issues appearing over and over again if you do that. And so, again, just a few recommendations in regard to trade psychology.
Yeah, those are great. I mean, those are definite action items for people. I'm sure a lot of you, when you hear those, you know that we're probably all guilty of those at times, no matter how experienced you are. We all kind of break these rules, on occasion. I would love to say that I never do, but it does happen sometimes. Like Brian says, if you document that a little bit, you can kind of see it in your results, as well as go ahead and correct those behaviors, and realize it's going to be a lifelong process for anybody. But you will get much better at it over time. I definitely speak from experience on that. So that kind of brings us to the end. The 7 secrets have each been laid out. Hopefully you guys have gotten something from each one. I'd like you to make sure that you write them down. I'll probably really quickly here just kind of name them off again in case you didn't have a chance while we're presenting this. And if you can go back and check each one, I'm quite confident that you're really on the profit track. If you're going to, like on some of them, not really be able to check them off, or not really sure that this really sort of encompasses the way that you trade, I have a pretty strong feeling that more than likely you're struggling with your trading right now. Number one, right, you got to be able to trade multiple markets and time frames with the same methodology. Number two, have a quit plan, power of quitting. Have something where you start and stop at set times, and you also have a place to stop as early as possible in those trading times. Don't turn it into a marathon when you're trading. Trading plans always rule. Number three, if you don't have a trading plan, exactly what you're going to do tomorrow, if you guys are thinking right now, I don't really have a clue what I'm going to do tomorrow, well, you're not checking off number three, and you're not going to be successful. So make sure you do. Number four, understand the art of trading. You 90% mechanical, 10% art. That's the split that you're looking for. Number five is managing risk. We kind of talked about position sizing. We talked about understanding stops. Troy gave you some really good points on that as well. Very critical. Number six, have the best trading tools possible for the markets that you've decided that you're going to trade. And then number seven, of course, all of this leads up to being able to handle and master the psychology of trading, and just kind of getting up and over the mind games. And Brian kind of took you through some of the real key areas on that as well. So those are the 7. If you can check off all 7, you think you've got them wired and mastered, congratulations. You're going to be obviously a profitable trader. If not, no big deal. You just need to work on these 7. So with that, I'm going to allow Brian and Troy to have any closing comments, and then we'll let all you go.
Thanks, Mark, and I hope this was beneficial for all that are listening and watching the video, and I wish you good trading.
Yeah, thanks for having me speak today, you guys. I really enjoyed it. I think we covered some real important issues. Mark, great idea to make a checklist. Uh, it's so important to make sure all 7 are covered because any one of those can be, the one thing that could turn your trading around. So I want to also just encourage everybody to go back and review this list and make sure that you have covered all these important issues with your trading.
Great. Well, thanks everybody, and successful trading to you.